Good morning. I am Kevin Price. Delighted to be with you. Going to spend some time talking to you about you and your business. You can't tell by that music. You know, we've got you, pretty well-trained audience out there that normally we talk about, have the Beatles song, Taxman, whenever Bob Loeser is sitting next to me. But he's going to help us get this show started, and we're going to keep him a couple of segments. And he's a regular on the show, and I love having him on the program and look forward to his visits. There's that music. Yeah, we have to get that in every segment whenever Bob Loeser is with us. He is the taxman, but he's a lot more. He's a great friend of the program, and I love the content that he brings. And always get excited when we are able to have him on for a couple of segments. Bob Loeser, first of all, tell me what's going on in your world as we enter the final stretch of 2015, the fastest year of my life.
Well, good morning. It has been a really fast year. It's gone by us very, very quickly. Right now, I think we're, I won't say in a stagnant point, where it is sort of the waters aren't rippling through the channels as quickly as they were early in the year. We still got one more deadline, which most of our clients have filed, and that's the Texas franchise report that with extension is due by November 15th. But interestingly enough, and we didn't talk about this much over the past couple months, there was an extension of time for corporate returns and personal returns as a result of that horrendous one-day flood that we had Memorial Day weekend, which I had to scratch my head to remember really what took place that 24-hour period. But the IRS extended more than, what was it, 20? It was about 20 days for the personal returns. They were due on Monday of this past week, and the corporate returns for a month and a half, just because of 1 day of flooding.
So corporate returns now aren't due until
the corporate returns were all due on the 5th, the 2nd of or 3rd of November this week. So they extended it from October 15th and moved them forward. So several clients came and said, well, we don't have to file our returns until the first week in November. Why do we want to do it? And our response is, well, because you owe some money. They're not abating penalty and interest because you're taking an extra 2.5 weeks to pay it.
Right.
They're not? Why wouldn't they give it to us? I'd like to see your hardship that it really has affected you, that 1 day of not being able to organize your information and hand it off to your tax preparer, right?
Yep.
So those are now behind us. We're starting to do a lot of planning decisions on, and we do talk about this, you and I, annually at year end, things like buying new equipment, a new warehouse, deciding on employees for the next year, seeing where we are compared to last year, and doing some proactive tax planning, which again includes, hey, I want to write a bonus, or I want to, put money into a retirement plan, or we're slimmer than we were last year business-wise. I can't do that, but I don't want to pay Uncle Sam a higher tax rate than we did last year, etc. So a lot of people are becoming not only more aware, but they're calling us rather than we're having to initiate the issue. In past years, they'll call and say, hey, can we start doing some planning? Can we sit down and talk about A, B, C, and D?
Yeah, sounds like a lot of sense. Now, you did mention the franchise tax. Does every corporation have to file, even if they don't have to owe?
Yes.
So if you're any type of state-recognized corporation,
if you're
an
active corporation in the state of Texas and had no sales last year, you still have to report. Otherwise, they'll claim that first you're late, then you're forfeited the charter. Then to reinstate the charter, they get you for like $75. So the worst thing you want to do is forget about it. The best thing you want to do is, file your zeros, send it off in April or May, and be done with it. But right now, the law, it's about 1.1 million, that if sales are under 1.1 million, you will not pay the franchise tax.
Yeah.
Over 1.1 million, then there's a couple ways of calculating it. It's either, it's 10% of taxable income, or it could be 5% of 1%. I'm sorry, 1% of taxable income, 0.5% if it's a manufacturing company. But you don't get every line item of your federal tax return as a deduction. You don't get rent, utilities. You get to take gross less if you're making widgets, the cost of those widgets. If you're a professional service company like myself, it's gross income coming in less the wages of all employees and their benefits and the salary of the owner. All right. So again, I don't get to deduct telephone, utilities, office supplies, copier, computer software, et cetera, et cetera.
Yeah, right. So, no, that's exactly right. In fact, I like to say that the franchise tax is taxation without representation of money you actually made.
Correct. Correct.
They have wars over stuff like that.
Correct.
I hate the franchise tax. Absolutely hate it.
And we've talked about this. I don't make it recurring that we have talked about it, but in years past, they used to have a law that you would pay. At one point, it was $150. So everybody across the board, if they had income over zero, would pay, or over a certain dollar amount, 150 would be the max. Then it would drop to like 35 as the max. All right, that's, in my opinion, a better system to go. I wouldn't mind if I had, and I do, under $1 million in sales a year to say, you know what, here's my check for 150. That's my part of doing business in the state of Texas. Yeah. All right, rather than taxing none of the companies under $1 million. But then nailing some of them. I had a couple, and I tell this story often. I had a client that generated, I think it was like $3 million in sales one year, and his business lost $250,000. When we ran the franchise, he owed $22,800. And you know what he did? Instead of taking my printed off the computer form, he did it in crayon and sent it in and told him, "Can't pay it, sorry. Not going to happen. I lost $250,000. You're welcome to it when I make it, and I don't know what he ended up working out, but he didn't pay it all."
Right? Is he still in business?
Yeah, he's still in business, and now he's profitable. But it's one of those quirks in the law that you didn't get deductions for certain things, and when they calculated it, bottom line, he owed $22,000 instead of being able to show a zero because of the $250,000 loss.
It's a terrible law. Terrible law. I know that they worked on it. I don't know what the final result was from the legislature, but I think we would have heard something by now.
Yeah.
So.
I think they've raised the limitation again, so it's gone from 1.1 to 1.25 or something, but I haven't seen anything in writing yet.
I know the governor wanted to make it to $4 million, but I just don't think there's enough political courage for that. Right. So, I want to talk more about politics after the break. For example, one of the referendums that was for statewide one. I don't want to talk about it now, but let's talk about it after a break, just to kind of set the tone for the listener out there, was this proposition to really increase the homestead, make it, where it's a lower tax burden when it comes to your property taxes, which sounds sexy, but I think it's riddled with problems. I want to talk a little bit about that.
It could be a double-edged sword.
One of those things that can come back to haunt you a little bit. So, but on housekeeping type things, one of the things I know you really like to emphasize is that now's the time to clean your closet, now's the time to clean your garage.
Correct, because you've got until December 31st to take whatever you have to Goodwill, to Purple Heart, to whomever. And now what they'll do is they'll give you I'll call it a blank slate. They'll give you a card and says, here you go. They'll put your name and phone number on it, and then you fill out what you gave. And as long as you're detailed, I did this about 4 weeks ago. I took 3 bags. They were old shirts. As you well know, I've gone through a diet program this year. I'm down nearly 40 pounds. And so my extra tent-size shirts don't fit any longer. I boxed them. I put them in. I took them to Goodwill. They gave me 3 tickets. That bags show each of them about 14, 15 shirts apiece. And I get to take my deduction. And you got to be reasonable about that deduction. It's really what the thrift shop would sell that shirt for and price, not what you have to replace it for if you went to JCPenney's or Macy's or whatever the case may be.
Right.
Right. But you also want to do that. You want to make sure that if you need deductions this year, that your property taxes are paid by December 31st. And some mortgage companies want that notification done on December 1st. That as a part of that month payment and the escrow needs to be paid before the 31st so that you get the deduction for it. You may not need the deduction because your income is down, so you may want to push it until January. Talk to your advisor or call us and chat about it further. And then you want to do things, and we've talked about, if you make your mortgage payments on the 1st of each month and you want an extra deduction for this year, make your January 1st, 2016 payment on the 27th of December.
Very good.
You're talking about 4 days, but if it's a $2,000 payment and $1,500 of it is interest, that could save you right there $500-$600.
There you go. Okay. Taxman Bob Loeser, and the email is taxmanbob@pdq.net, and the phone number
713-953-1272.
And when we come back, much more for you with Bob Loeser here on The Price of Business.
There's one for you, 9 routine for me. 'Cause I'm the tax man.